Welcome to PhatBear Alpha, where we dissect the market's mood swings with a side of sarcasm. I'm your host, PB. Bitcoin's still lounging around that 95K mark. But don't let that calm fool you. This thing's coiling up tighter than a spring in a bull trap. One wrong move, and bam, we're either mooning to 120K or diving back to 80K again. The total crypto market cap is sitting at a hefty 2.98 trillion, down 0.5% today. Meanwhile, the 24-hour trading volume's up 6.3% to 81.4 billion. Bitcoin dominance is still king of the hill at 63.4%. The fear and greed index? It's at a neutral 53, basically the market's version of shrugging its shoulders. For alt performance, the winners are Sign, Virtuous Protocol, Anitia, and Sol Layer. The losers are Trump, Dog with Hat, Deep Book, and Popcat. Buckle up now. We're moving over to the macro news about China's push for a global yuan. Chinese President Xi Jinping's gallivanting through Southeast Asia, shaking hands and dodging U.S. tariffs like a pro, while the People's Bank of China, PBOC, is back home playing 4D chess with the yuan. China is seizing on a moment of confusion and disruption in global trade to shove a yuan into the spotlight. Cross-border yuan payments hit a record high in March, up to $549.9 billion, overtaking the dollar for China's transactions. The PBOC been busy, too. They've got China UnionPay rolling out QR code payments in Vietnam and Cambodia, so tourists and small businesses can ditch the dollar for yuan. It's like Venmo, but with a side of geopolitical swagger. China's been at this yuan internationalization game for years, and it's less Moon Lambo and more slow grind. Back in 2023, the yuan was already nudging out the dollar in China's cross-border deals, but globally, it's still a shrimp next to the dollar's whale, for 0.5% versus 83.71% in trade finance. This play is likely just Xi trying to counter Trump by devaluing the yuan just enough to make Chinese exports cheap, without tanking confidence. Next up, let's pivot to the crypto section, starting with Circle making moves in the Middle East. Circle, the folks behind the $62 billion USDC stablecoin, just got in-principle approval from the Financial Services Regulatory Authority, FSRA, of Abu Dhabi Global Market, ADGM. They're now allowed to play money services provider in this fancy financial free zone in the UAE's capital. This isn't just a random flex. Circle set up a legal entity in ADGM back in December 2024, and now they're ready to sling USDC across the Middle East and Africa like it's the new oil. Abu Dhabi's been gunning to be the Middle East crypto hub, handing out licenses like candy to Binance, Kraken, and Paxos in recent years. Circle's also cozying up with local players like Lulu Financial Holdings to grease the wheels for cross-border payments and remittances using USDC. They're not just playing the desert. They're also prepping for an IPO in the U.S., which means they're juggling regulatory hoops on two continents. Bold move, considering the SEC's got a habit of turning crypto dreams into nightmares. Next story. Solaxy, aka SolX, is strutting onto the scene as Solana's shiny new layer, 2 Savior, promising to fix all the network's dirty laundry, like those pesky outages and transaction fails that make Solana feel like a dial-up modem in 2025. Solaxy's pre-sale just hit $32 million, with the token price at a bargain bin of $0.001708. They've even launched a block explorer to show off every Layer 2 transaction in real time, because nothing screams trust us like a fancy dashboard, right? Solaxy's roll-up-based setup processes transactions off-chain to unclog Solana's mainnet. And it's not just a Solana stand, it's got cross-chain vibes, allowing you to bridge to Ethereum for extra liquidity and DeFi cred. Investors are eating it up, with over 9.1 billion SolX tokens staked at a wild 125% APY. Solaxy's $32 million raise is a big flex. But in this crypto game, big raises don't guarantee big wins. Just look at 2021's graveyard of next big things. I'm keeping one paw on my wallet and the other on my skepticism. Last crypto story. Succinct Labs, backed by a fat $55 million raise led by Paradigm, is building what they call a decentralized prover network for zero-knowledge ZK proofs, using their SP1 ZK VM to make blockchains faster, cheaper, and more private. Sounds like the usual crypto buzzword salad, right? But here's the kicker. Their testnet, which dropped earlier this year, is being hyped as the most addictive thing since Candy Crush. They've got a cap of 25,000 users, which makes it feel like a VIP club for degens. Why the frenzy? First, Succinct's promising to solve blockchain's big headaches, scalability, high fees, and privacy, using ZK proofs, which let you verify transactions without spilling all the secrets. Their testnet lets users mess around with proof contests, leaderboards, and games like some kind of crypto arcade. ZK proofs are the darling of 2025's crypto narratives, with projects like Alpine Labs and Locust Chain also flexing testnets for Bitcoin and smart contracts. Succinct just riding the wave, but they've got Paradigm's cash and a slick user experience, which should count for something. Time to wade through the DeFi swamp. For our first story, we're ripping into the partnership between Lombard and EigenLayer. Lombard Finance, the project trying to make Bitcoin more than just digital gold, have partnered with EigenLayer to drag Bitcoin into the restaking game. They're using Lombard's liquid stake Bitcoin token, LBTC, to let BTC holders earn yields like they're farming on a DeFi protocol. You stake your Bitcoin on the Babylon protocol for a base yield, then restake that LBTC on EigenLayer to secure other decentralized services like bridges, oracles, or Layer 2, and rake in extra rewards. It's like lending your BTC to a buddy who's lending it to another buddy, and somehow you all get paid. They're not stopping at hype. Lombard and Eigen are planning to tighten up restaking security and slashing designs over the next 6 months, because nothing says trust us like promising to punish bad actors later. And Lombard's already got Bybit and Binance on board for LBTC minting, so the big dogs are sniffing around. But people are saying this is just putting your Bitcoin on another chain, like when Polkadot or Solana tried it. Sure, the dual yield model is sexy, but I've seen yield farming promises go south faster than a leveraged long in a bear market. Next story. Kaia chain is the love child of a blockbuster merger between Clayton from South Korea's Kakao and Finskia from Japan's Line. Launched on August 2024, it's a high-performance, EVM-compatible Layer 1 blockchain that's basically Asia's answer to how we get normies to care about Web3. Kaia's got a user base over 250 million thanks to KakaoTalk and Line Messenger, which are like WhatsApp on steroids in South Korea, Japan, Taiwan, and Thailand. Their big plan? Make Web3 as easy as sending a sticker in a chat. Kaia's integrating mini dApps right into Line and KakaoTalk, so your grandma can swap tokens or buy a tokenized gold bar without downloading MetaMask. The Kaia Wave program is their developer bait, offering up to $1.2 million per team for building these mini dApps. Think DeFi, GameFi, NFTs, and real-world assets, RWAs, like real estate or ships. Yep, you can own a fraction of a yacht while texting your buddies. Kaia is leveraging Kakao's 95% grip on South Korea's messaging market and Line's 200 million users to onboard Web2 users faster than you can say bull run. Last DeFi story. Novastro is a Layer 2 blockchain built on Movement Labs, waving the RWA flag like it's leading a tokenization parade. We're talking real estate, art, intellectual property, commodities. Even your grandma's vintage vase could get a token if Novastro has its way. They promise us an AI-powered ecosystem with their RUSD stablecoin as the centerpiece for seamless trading and yield generation. They're calling it end-to-end regulatory-compliant turnkey tokenization, which sounds like a lawyer's fever dream, but also a nod to keeping the SEC off their backs. Web3 Port Foundation dropped a $100 million bag in February to juice up Novastro's liquidity, focusing on our USD and RWA trading pairs. Novastro also announced partnerships with RealtyX and Vestate to tokenize property rights and real estate commissions. They claim they're the first to bring tokenization to Movement Labs and predicting a $30 trillion on-chain value unlock by 2030. Let's hope that's the case, because tokenizing everything sounds sexy, but it's a logistical nightmare. Tokenized assets often get slapped with securities laws, and jurisdictions like the U.S. are patchwork of pain. For our airdrop guide today, we'll go over Sidekick, Sidekick Labs is pitching itself as the pioneer of LiveFi, a fancy term for a live streaming trading platform where you can watch, trade, and earn all at once, like Twitch for crypto, but with less yelling and more meme coins. They're building a one-stop shop where streamers share real-time market alpha. The viewers trade assets instantly, and affiliate partners sponsor the party for exposure. How can you position for their airdrop? First, you need to register to get a live stream invite. After you get one, start live streaming on their platform. You can stream anything you want, from airdrop farming, memes trading, or whatever content you produce relating to Web3. If you build a large enough following, you may get donations like with Twitch or YouTube. The airdrop should be allocated down the line for streamers who dedicated their time to platform. That's a wrap for this Tuesday's episode. It's PB, signing off with a prayer that Bitcoin breaks 100K before this month ends.